North Korea tensions weighing on markets. The Dow Industrials on pace for the biggest weekly loss since March, while the S&P 500 and the Nasdaq are looking at what could be the worst week of the year. Meanwhile, market volatility at its highest level since the election. The so-called volatility index, or the VIX index, has surged 44% since those historic lows. Joining us right now to talk more about it, S&P Global Market Intelligence Principal Analyst Rich Peterson. And Rich, good to see you. Thanks so much for joining us.
Good morning, Maria.
Does the market feel different these last few days? Does something feel different about sentiment and market demand? What do you think?
Well, there's some complacency that perhaps got into the markets earlier this month. Obviously, August is notoriously a month with a lot of volatility. Many traders, many firms see individuals away on vacation. So there's a lot of historic evidence that shows,
Yeah, but August. I'm talking about North Korea and the global markets these last couple of days. Does it feel different to you? Have we moved toward a certain turning point, whereas now we're looking at a sell-off accelerating?
Well, I don't know if we're in the wilderness, but the fact is that we had a 36-point drop in the S&P yesterday, second worst drop this year, but historically only ranks not even in the top 75 of all time. So it's maybe a flesh wound rather than a larger crisis.
Yeah, I would reflect that sentiment. If we go back last week, we saw realized volatility hit 4. Right, in the market, which shows that not a lot of action and activity. We went 58 days without a 1% move. We finally now had over a 1% move, and it was to the downside. Now, if you look back at history, that's actually bode well for the markets going forward, because trees can't grow to the sky. We need a breather. This is a macroeconomic concern, but you have to think, if you look back over the last 3 years, all the geopolitical events that have happened came and then they went away, and they were handled, and it didn't spook the market. And what's underlying the market is earnings. Earnings have done very well. What has your take been on earnings season? Because technology has done very well. It's over 23% of the S&P 500. What do you make of it?
Well, Kevin, I should say, first of all, when we had these past episodes that rattled the market, you look at a year or 6 months later, we saw a recovery. After 9/11, the S&P was down 5% the first day trading. A year later, it's up over 4%.
The Dow recovered all of its losses after 9/11 and in the days after that by early November of that year. So the comeback was really quick.
Yeah, so the markets are resilient in that regard. The American economy is resilient. In terms of corporate earnings, we had, according to the Capital IQ numbers, second consecutive quarter of double-digit earnings growth.
What is that, 11%?
11%. In fact, if you look at the numbers for the expectations for the third quarter, and then we're midway through the third quarter already, analysts have been lowering their numbers less than historically. We are typically, analysts drop the numbers as they're going closer and closer
to the quarter.
It's not as bad. But we're in the leadership now. It's really energy, information technology, financials. As mentioned to Kevin earlier, if you X out energy, however, the numbers go to single digit. But then again, where's all the activity in the market? It's information technology, financials, and healthcare.
Yeah, what about the agenda? Let's talk about what happens if, in fact, we were to see tax reform. Is that an extra upside potential for the market? Or if, on the alternative, if we don't see anything come out, there are growing concerns as to where this agenda stands. President Trump hit Senate Majority Leader Mitch McConnell again last night for failing to move the needle on health care reform. Watch this.
Mitch, get to work and let's get it done. I'll tell you what, if he doesn't get repeal and replace done, and if he doesn't get taxes done, meaning cuts and reform, and if he doesn't get a very easy one to get done, infrastructure, if he doesn't get them done, then you can ask me that question.
So Rich Peterson, what's priced into this market at this point? Do we see a big rally if they get tax reform done? Do we see a big sell-off if they don't get anything done this year?
Well, the fact is that nothing has been done this year. When we're already up 11%. The fact is...
Well, I think this market is so strong partly because of the rollback in regulations. That has been done.
Right. I know that they showed pictures of the Federal Register where it was larger in past years and has narrowed in size. I think, if they get some resolution with tax reform by the end of September, though, to vote on the debt ceiling, that may, hold that back.
Well, the dollar has been down 7%, and global growth is up, too, so it can't be regulations. Entirely.
There's a Wall Street Journal survey of economists, and the economists show rising risk of a financial mishap. 22% of economists surveyed see the chance of the government shutting down by the end of the next month. So it's more than 1/5, 17% chance that the U.S. Treasury will at least temporarily skip making payments on obligations such as the government payroll or issuing Social Security checks.
Not good.
So it's interesting because you talk about North Korea, but I think that in the last couple of days with the rhetoric between McConnell and Trump, that investors are starting to factor that in more.
And wonder what is going to get done.
Yeah, Washington has to get on the same page. They really can't have this bickering, and they have to work together for these common goals.
What's your gut feeling? Do we get some version of tax reform, yes or no?
It's up in the air. I mean, you ask me how the New York Jets are going to do this year or the Giants.
Oh, I know what the Jets are going to do.
But, I think... hope is eternal. So I think.
Look, we're going to have Kevin Brady on coming up, the chairman of the House Ways and Means Committee, and he is pretty adamant that they're going to get something done. You just wonder if it's going to be actual reform or just tax cuts. But that's what he's going to tell us later. Right. But we'll walk through the timeline with him.
And the inability to get tax reform done is hurting M&A activity. There's many CEOs talking about how the inability to talk about repatriating dollars abroad or bringing back lower rates, stopping deal activity. We're down about 15% year over year in terms of deal flow. Interesting that deal flow is down so much. We've got to talk about Snap. Earnings season winding down. Snap reported last night, showed no signs of snapping back, by the way. Stock is down 14%. The social media company delivered worse than expected results, and growth actually slowed. Snap lost nearly 4 times as much this quarter compared to the same period last year. Your take on Snap?
Yeah, I mean, listen, this isn't a surprise. Lockups have come about. Insiders can actually sell right now, people that work for the company, and they have less than 1% of digital ad spend. It all goes to Facebook. Facebook has 1.3 billion daily active users. Snap only has 173 million. Okay. Snap is asking advertisers to shoot vertical video and not horizontal, and so that requires customization of ads. Advertisers don't want to do that. But don't worry, Evan Spiegel made out just fine. When they went public, he got $750 million. Listen, when you have the founder walk away scot-free with $750 million cash,
wow,
cold cash,
cold cash,
right? It doesn't, so he ended up just fine. They have a dual class structure. You can't even vote. So why would you buy these shares if you don't even get any rights?
So that's a good point, and that's the investors have to ask that question. Yeah. When you get no voting control whatsoever, you have to ask yourself if you actually want to be in that company.
An issue we raised on this very program before the shares actually went public.
Evan Spiegel made money. Evan Spiegel made money. The bankers made money. The people that bought on this IPO are getting hosed, and they should have listened to everybody and done their due diligence.
Let me say one thing about the IPO market. Even though issuance is up year over year, because actually in 2016 the numbers were really held back with the first quarter market activity was rather poor. About 43% of IPOs this year are underwater, below their offer price, though the average gain for an IPO is about 11%.
Wow.
Yeah, it shows you that Silicon Valley is all chicanery. I mean, their valuations are pie in the sky, and that's the biggest issue. And including Uber, it's not worth $60 billion.
Fired up this morning.
Kevin, where do you stand on Snap? I can't figure it out.
Tell us what you really think.
Well, shareholders are getting hurt. Look at Blue Apron.
That way before they ever went public, that it was fleeting, and those preteens and teenagers are not who bring you the dollar.
Yeah, we talked about this a long time ago. Rich, don't be such a stranger.
I'll be back.
Good to see you. Rich Peterson, S&P Capital.